You're down 2%. No big deal, you've seen worse. Down 5% now, but it'll bounce back. It always bounces back. Down 12%. You're not selling now. Selling now would mean admitting you were wrong. This is how traders die. Not in one bad trade. In the trade they refuse to leave. Here's the uncomfortable truth. The market doesn't know you own the stock. It doesn't care what price you bought it at. It doesn't owe you a recovery. But your brain doesn't believe that. Your brain thinks the market has a memory. That if you just wait long enough, it'll pay you back for what it took. This is called loss aversion. Nobel Prize winning research on it. Kahneman and Tversky proved something simple but brutal. Losing money hurts roughly twice as much as gaining the same amount feels good. So when you're sitting on a loss, your brain isn't thinking like a trader. It's thinking like an animal trying to avoid pain. And the easiest way to avoid pain, in the moment, is to not look at it. Don't sell. Don't confirm the loss. Just wait. But not looking at it doesn't make it smaller. It makes it bigger, because the market doesn't pause while you're not looking. But here's where it gets worse. Imagine you paid for a movie ticket. 20 minutes in, the movie is terrible. Do you leave or do you stay because you already paid? Most people stay. Not because the movie will get better, but because leaving feels like wasting the money twice. Once on the ticket, once on the time. Trading losses work the exact same way, except the ticket price isn't fixed. Every minute you hold, the price of staying goes up. And the movie doesn't end in 2 hours. It can run for months, dragging your capital down with it. This is the sunk cost fallacy, treating money you've already lost as a reason to risk more, instead of treating it as information. The money is already gone. The only question is, do you want to lose more? Therefore, the only question that matters isn't, will this recover? It's, if I didn't already own this, would I buy it right now? At this price? If the answer's no, you already have your answer. There's a specific moment every losing trader recognizes. It's not a strategy anymore. It's a prayer. Please, just get back to even. I don't even need a profit. Just let me out at break even and I'll never do this again. This is what traders call hope trading, and it's the single most expensive habit in the game. Because the market doesn't negotiate. It doesn't know you asked nicely. Hope isn't a stop loss. Hope is the absence of one. The trader who sets his exit before entering doesn't get lucky. He just decided his exit before emotion had a vote. The trader with no stop loss doesn't get unlucky either. He just let hope make a decision that should have been made by a plan, days earlier, with a clear head. Here's the mental flip that separates traders who last from traders who don't. Cutting a loss doesn't feel like winning. It feels like giving up. Your ego reads it as defeat, but zoom out for a second. A small loss, taken on purpose, isn't a failure of your strategy. It is your strategy. It's the cost of staying in the game long enough to catch the trades that actually work. Professional traders aren't right more often than beginners. Often they're right less. The difference is, beginners let their losses grow and cut their winners short. Professionals do the exact opposite. They cut losses fast and let winners run. Therefore, the goal was never to avoid losing. The goal was to lose small, on purpose, over and over, so that when a real winner shows up, it can pay for all of them and then some. So how do you actually do this when your brain is working against you? You remove the decision from the moment you're most emotional. Rule 1. Decide your exit before you enter. Not somewhere around here. An exact price written down before a single candle moves. Rule 2. Treat the stop loss as a promise to your future self, not a suggestion to your current self. Moving it further away when the trade goes wrong isn't giving it room. It's negotiating with the exact bias we just spent 15 minutes explaining. Rule 3. Size your position so that hitting your stop loss doesn't wreck your week. If a 1% stop loss feels devastating, your position was too big. Not your stop too tight. Go back to that trader from the beginning of this video, buried up to his neck in red candles. He didn't lose because the market was against him. He lost because he refused to leave when leaving was still cheap. Cutting losses fast doesn't feel like a win. It never will. In the moment. but it's the only decision that keeps you in the game long enough to actually become good at this. The market will always give you another candle. It won't always give you another account.